Welcome to Trader's Toolbox with Kevin McCormick and Just Some Guy Trading. This is part 2 of our series on the Commitment of Traders report. If you aren't familiar with the COT report, I recommend watching part 1 to learn the fundamentals of the report before using this in your trading. In part 2, I will discuss how I use this report in my trading to identify possible market reversals. As a reminder, this presentation is for educational purposes only. As we discussed in part 1, this is the most important group to follow for trend reversal setups, but it can be difficult to identify extreme readings. Therefore, I use Williams COT Index. It is an indicator that compares the current COT report to past data points to help us identify recent extremes. Okay, let's start with the weekly chart of wheat. And as we showed you in part 1, I have the COT net position index at the top, and we discussed how we want to find extreme readings. Wheat's a little bit easier to notice just by looking at it because you have these large fluctuations. But the tool that I like to use to help me identify recent extreme readings is the Williams COT Commercials Index and the Large Fund Speculator Index. Basically what this does is it has a look back period. I have it currently set to 26 weeks, and then it shows me what the current buying and selling is relative to the last 26 weeks. And as you can see here, this can do a great job of giving us indications of when the market might be hitting an extreme buying and selling level compared to the last 26 weeks, helping us find the right entry and exit points for the market. So as you can see here, the wheat market hit a selling point, extreme selling, market started to decline. Here once again, extreme selling, market decline. Then we moved into this area and the commercials started buying. Bought again here, and then the market took off. Something to keep in mind here, though, is also commodities can be driven by supply, demand, and shocks. And this was the Ukraine war start, so that caused the market to go higher. But you can see here that we had commercials starting to sell into this, and then we hit this extreme point of selling. This is May. War is still going strong, but that's when we started our steady decline in the wheat market this year, and now we are at a very extreme bot level. The last chart I want to show as an example is gold. So let's jump into that. Okay, and on this chart now we have gold, and this is a great example of how being able to do the 26-week look back for extreme readings helps us find buy and sell signals, because just looking at the COT net positions by itself, you really don't see too many buy and sell opportunities. But with the look back, we can see here, great buying opportunity, another great buying opportunity, and then we had a great buying opportunity here, catching this huge move higher. And then, of course, the commercials went to selling, and then we got the market decline. Same thing with the sell opportunities here. Quick moves lower. One thing to keep in mind is we can be overbought, oversold for weeks, even months, as the commercials build their positions in the marketplace. So that's why this is just one of the setup tools we look to help us identify market reversals that could be upcoming, and tie it together with some of the other indicators in our toolbox. If you've enjoyed this content, please remember to subscribe and like, and thank you for watching Just Some Guy Trading.